South Africa has negative outlooks from both Standard & Poor's and Moody's. Its current credit rating with S&P is BBB, and its rating with Moody's is Baa1. Any further downgrades from rating companies will have far-reaching implications, as non-residents hold about 37% of South Africa's government bonds. We're now joined by Deputy Governor of the Reserve Bank, Lesetja Kganyago, to discuss the impact of the downgrades on the rand. Lesetja, let's just start there before we drill further into the conversation and what we can expect if we do see a rating downgrade.
Look, I mean, at the moment we have got a negative outlook on our rating in Moody's. And what you then have is that we still have 2 notches above the entry investment grade. Today, as we tabled the financial stability review, we were pointing out that if South Africa gets downgraded below investment grade, so even if there is a downgrade now and we are still investment grade, it's okay. But if we get downgraded below investment grade by 2 rating agencies, what we would then have is that we would fall out of the Citibank Wigby index, in which case that the investors who are tracking that index will then be forced to sell their holdings of South African bonds. But as things stand now, we still have a cushion above that investment grade.
Deputy Governor, it's Lindsay Williams in Cape Town. I would have thought that the ratings agencies would have been very encouraged by what the Finance Minister said on the occasion of the medium-term budget policy statement a couple of days ago. So I think that they would have been calmed by that. Let's have a look at the data that came out today, though, the private sector credit extension numbers, which were benign, and also the fact that the unsecured lending element of that PSCE came down from whatever it was, I think 13 months ago, 30% down to 18%. Are you encouraged by that? Are you encouraged by the fact that that particular aspect has come down? Or are you saying to yourself, well, in fact, that's a bad thing because it means there's no spending in the economy?
No, I mean, you're right with respect to the budget policy statement. It was a very positive fiscal stance coming from the minister. In terms of the data that came out today, you must understand those were also monthly data. When you look at the financial stability review, what we have done is to also break down that component that is called unsecured lending into the components that show the amount of loans that are below 30,000 rand per loan. And what you find in that is that you are actually seeing a contraction. There is actually a contraction of 8% in the amount of unsecured loans below 30,000. And we can see that is beginning to become a trend. So there is definitely a slowdown in the rate of growth of credit in South Africa. So to the extent that that is happening with respect to the households, it's a welcome picture because, again, in the financial stability review, we do show that households are highly indebted. They have been sticky around 75% of personal disposable income, and they are at around 43% of GDP.
Deputy Governor Wayne, we're talking now about possible downgrades. Let me change the question a little bit. What do we do to get upgrades? What must we do in the macroeconomic and maybe even the microeconomic management of our country so that we start talking on programs like this about possible upgrades and not about possible downgrades?
Wayne, if you have a negative outlook, the first challenge would be that the outlook have got to be revised to stable. Right? There are particular things that have been pointed out by the rating agencies in their assessments of South Africa. Some of them we agree with, some of them we disagree with. What we can't run away from as South Africans is that our economy is in need of structural reforms. And those challenges that we are facing as an economy, it's something that had been diagnosed over and over again. Whether you look at the diagnostics from the National Planning Commission, whether you look at what the OECD had to say about this economy, whether you look at what ASGISA had to say about this economy, whether you look at what the New Growth Path has to say about this economy, it is clear that we needed those structural reforms. And I think that the National Development Plan had begun to put those challenges on the table to say, these are the reforms that we need to embark on. And I think that when we look back, the important thing here is that here is a document that has been adopted by all parties in Parliament. We just have to go and implement those. That is how I think that we could begin to stem the negativity that we see with respect to our sovereignty.
Sir, there's a high correlation between credit extension and GDP growth. Now, given that households are starting to rein in consumption, and given that there's less effectiveness to government spend, and in fact government spend is possibly at its highest, do you agree with the IMF statistics or forecasts of 3% GDP growth for South Africa next year, or is there a risk to that number?
Well, we have our own forecast. We have 2% this year, and we have slightly above 3% next year, and I think the Treasury is standing at about 3.5 or something like that. The environment, the global environment that we are in now, is an economic forecaster's worst nightmare. I don't know how many times the IMF itself had revised its forecast this year. Historically, the IMF used to present a forecast during the spring meetings in April and present another forecast during the annual meetings. Since the advent of the global financial crisis, you would have at least 4, sometimes 6 forecasts by the IMF with respect to growth. So understand that context. We have comfort that the forecast that we had put on the table takes account of the uncertainties that we have, but you cannot be definite. These things, at the end of the day, they are forecasts. And but as we had said that in the past, the forecast that we had put on the table, we had found to be credible, and we are prepared to live with it.
That was Deputy Governor of the Reserve Bank, Lesetja Kganyana.